Nobody starts at the finish line. You have to start somewhere. In order for you to get to where you're going, to meet that destination, you can't think that you're going to get there instantly.
Welcome to another episode of the Mr. Mindful Minute podcast, where we touch on different things of different areas of life, or how we could go from a nothing place to a something place. And today I have a special guest. I'm going to let her introduce herself and talking about everything that she do. Please tell us who you are and what it is that you specialize in.
Awesome. Thank you so much for having me. My name is Apris Walker. I'm a licensed financial advisor. So that's all things life insurance, investments, financial planning, eliminating debt, helping people, middle income Americans become financially independent, properly protected, and debt free. So that's what I do. Love helping talk to people about personal finance, and just reading their financial goals, things that people thought, were out of reach, just helping them come up with a GPS, a financial game plan to help them get from where they are today to true financial independence.
Oh, I love it. Now, let me ask you this question. What got you into wanting to help people in this field specifically?
That's a great question. So before actually getting into this field, I've been in the field now for about 3.5 years. Before this, I was a licensed behavior specialist. So I did therapy with children in the school and community settings. So always been a helper. And what I realized that a lot of the reasons why we are struggling in our community is because of a lack of financial education and a lack of financial resources. So I was presented with this opportunity. I was about 7 months pregnant, about to go out on maternity leave. And at the time, I was an independent contractor as a therapist. So I wasn't going to be making any money, but I still had to maintain my livelihood for me and my children. So I was presented with this opportunity, started off part-time, and never actually went back to that other career. And this is what I've been doing now for the past 3.5 years. So even though it's completely different than from what I originally went to school for, it allows me to help people, but just on the foundation of finances and really helping people change the financial trajectory of their family for generations to come.
Nice, nice. Now, you said something at the very beginning, and you talked about, having a GPS system, right? And we know that we know what our GPS does. But when it comes to the financial aspect, and especially the Black and Brown community, we are kind of like behind the curve because we don't have that GPS system in place, and we think that, oh well, if I do this, it's going to get me to where I need to be, but we be short-sighted.
Mhm.
So what are some ways that we actually use this financial GPS that you're talking about?
So I love what you said. And a lot of times, and this goes back to just systematically, culturally, right? We're not even going to touch on that, but we kind of think about today. Okay, we don't think about tomorrow. We don't think about the next generation. We only live for today. For whatever reason that is, we think about today. And for a lot of us, we allow money to burn our pockets. So what I do, because just like everything starts in the mind, right? So if I can help people gain the education and the knowledge to actually change how they think about money, I can then help them implement different tools. So the first thing I do is just teaching people how money works. So I'm teaching them different rules of the money game, and it challenges what they've always thought all of their life. And once we do that, I can then take a deeper dive to say, okay, where are you at right now? Because a lot of people don't have a money problem, they have a spending problem, right? Because if you go to work and you get paid, you're getting money, but what you do with that money after you get it, That's where the problem arises for a lot of people. So helping people understand that it's important to always pay yourself first. So before you pay a single bill, you need to be paying yourself in a form of savings and investments. So this way, once you look up in 30, 40 years, you actually have something to show for it, and you actually have something to live off of and pass on for future generations.
Okay. You said something, a couple of things that stuck right out to me, right? So the first thing that stuck out to me was the fact that you said we live for today, like we don't even think about the future. And I know for myself, for a long time, I didn't see me living past 18, then I didn't see me living past 21 and 25. And here I am now, 36 years old, right? And it just makes me say, well, when we have that short-sighted mindset, we don't do any planning or preparing. So we don't even look to get the knowledge that we know we don't have. Mm-hmm. And so then also when you talked about 30 and 40 years, so obviously you're talking to somebody that's younger who needs to start doing these things right now. So the future them is going to actually be well off. So how do a person actually start taking these steps?
So that's great. So the first thing we do what's called a cash flow analysis, right? Because like I said, and we do a complementary financial needs analysis. So it actually says, listen, what are you bringing in and what are you putting out? Because again, it's not that people don't have the money, is that they're usually overspending. Because when I sit down with people, they might say, well, Apris, I don't have any extra money to invest. Oh, but you do, but you just eat out every day, or you buy coffee every day, or you're paying $500 in a cable bill. So the first step, like I said, is actually showing people where they're overspending at to help them find the money to start properly protecting themselves and to invest, because that's another thing. Back in the day, and you probably know it, with our grandparents, great grandparents, the insurance man would come out to our house and only sell us $10,000 worth of life insurance, right? It costs $10,000 to $15,000 to bury somebody. But let me ask you this question. Do you financially contribute to your household right now?
Yes, I do.
Right? So you have an income, right? Now, if something were to happen to you today or tomorrow, would your income continue coming into your house?
No.
Will the bill stop?
No.
So what happens when the income stops, but the bills don't stop?
You'd be underwater.
You're underwater, right? And that's what I help people realize, because a lot of times, even if I ask somebody, do you have life insurance? And they say yes, but they have a $10,000 policy. You don't. What I do is I help people develop income protection plans. So this way, if something happens to you today or tomorrow, your paycheck is still coming into your household, whether you're here or not, so that your wife doesn't have to go get a second job, or so that she doesn't have to go into debt, taking out a loan, because she still has to pay for your portion of the bills. So $10,000, $15,000 worth of life insurance is not going to cut it when you have a family that's still relying on your income, whether you're here or not. So again, we're already on the wrong footing when we don't understand these rules, and we wonder why we're set back generations. Because think about the damage that's done. A husband dies, he leaves, his income is not coming in. The wife has to go get another job or take out some more debt. So now what does that do? That puts her steps back from where she could be. And now that sets the kids back from where they could be. So financial life insurance is the foundation of generational wealth in this country, and we got to get on board with that.
Whew, now hold on now for a second, right? Because I know a lot of people is hearing about this now. They like, oh, well, insurance and do this and it'll do this, right? What is the most basic process in order for a person to get started? Because you said, they paying them. Like, what does that even mean? Like, you saying, yeah, you died, but you still got income coming in. And it's just like, wait, how do I have income coming in if I die? So
because let's just say a person makes $30,000 a year, right?
Mm-hmm.
They make $30,000 a year. I set them up with $300,000 worth of life insurance. 30,000 times 10 is how much?
Ooh,
All right, I know. 30,000. I know. Listen, I'm just say it because I don't even want to put you on the spot, right? So check this out, right? 30,000 times 10 is 300,000.
Mm-hmm.
So if I set somebody up with a $300,000 life insurance plan, that means that 30,000 is going to be coming into their house for the next 10 years. Because 30,000 times 10 years is $300,000 worth of life insurance. So that's another thing. When we get, and you've seen it, people be like, I don't have no money, but we all know somebody who won a lawsuit, right? And they got some money and they blew it. But think about if you would have invested that money would have then made you money. So if I pay out a death claim and I sit with a family and I say, listen, your husband had $300,000 worth of life insurance. Take $15,000 to do the burial, right? Take $50,000 to set aside for your child's education, and then the rest of that you reinvest it, right? And we have something called, distribution plans, where now we can help send a portion of that money to the spouse every month, so that this way she can cover that husband's portion of his bills, even if he's no longer here. A lot of people think that their responsibility for their family stops when they leave this earth, but it doesn't. If you have people relying on your income, you need to have something in place to make sure your income continues to come in, whether you're here or not. But a lot of us, again, the insurance men and stuff that used to come around to our grandparents and stuff, they selling us these little itty bitty policies to just put us in the ground and not giving us the right information. And a lot of us are also, we have the wrong type of life insurance. And I tell people all the time, oh, Apris, I have life insurance. No, you don't. You don't even know what you have, and you're not set up properly. All life insurance is not created equal. So it's important to know what you have to make sure your family is not just going to be left out here when something happens to you.
All right, so let's break that down, right? Because let's just say, for example, I say, hey, I got life insurance. What type of insurance policy do you got? I don't know.
Right.
I just know I got insurance. So what are the differences between life, or what are the different types of life insurance? And what do you think, because obviously you still have to pay for this monthly. So that's a factor as well. So what does that kind of like look like when you're teetering between those different decisions of which policy to get, and then how much money that you should probably be looking into paying?
Well, so that's a great question. And I tell people, even if you have life insurance, just allow me to do a complimentary review. Because before I got with the company that I'm with now, I had life insurance too. And I had it since I first had my first child. I was 21 getting this life insurance, and I didn't necessarily know what I was doing, but I knew I was making a responsible decision because I knew that I was about to have a child and I needed life insurance. But come to find out, I was set up with the wrong thing. And a lot of us in the Black and brown community, and not to get all detailed, and if anybody wants a complimentary review that's watching this, you can contact me and I'll share my contact information, towards the end. But I had the wrong thing. And most of us in the Black and brown community, we have what's called a cash value life insurance policy. Just to tell you very quickly, what that is. Cash value life insurance is when you have life insurance and savings bundled together, right? You pay a premium. A portion of that premium is going to go towards your life insurance, and the other portion is going to go towards what's called a cash value savings account. But what most people don't know, if you take out all of the cash value savings, it's going to cancel out your life insurance. If something happens to you, the company pays out the life insurance, but they keep the savings. So even though you're paying for two things, you only ever get to take advantage of one. So that's just like you saving your money in a bank. Something happens to you and the bank says, we're going to keep your money. right? And you've probably heard of situations. And then also people feel like cash value life insurance. I've seen people say this all the time. Cash value life insurance is going to allow me to be my own bank, because they're like, I can take my money and I can borrow against the policy. But what they don't realize is when you borrow against the policy, you're going to have to pay it back at 5 to 8% interest. Is it fair that you should have to borrow and pay for your own money?
No.
Absolutely not. It's your money. Why would you need to pay interest on your money? And we've all heard stories. Oh, I know Uncle Johnny had life insurance, but when Uncle Johnny passed away, is no money paid out because Uncle Johnny borrowed against the policy. The interest now is more than what the policy was worth, and there's nothing to pay out to the family.
Yeah, see, that's why I said, I want to get a proper understanding, because I know that there are people that do not understand these terms and these policies and whole term insurance. So kind of break that down. What does that mean? Whole, term, and what does that mean?
So whole life is grouped in with the cash value that I spoke about. So if a person has whole life, variable life, universal life, and that is too much to dive into in this one segment, but all of that is grouped up in the cash value life insurance. But a lot of people psychologically get tricked out and say, well, I want whole life insurance, because they think, oh, I'm gonna have it for my whole life, but still not realizing you're overpaying for a little bit of life insurance, right? And then the thing about it is, again, you got to borrow to get your own money. You should never have to, you have to pay to borrow your own money. You should never have to pay to borrow your own money. Okay. So what I do is I educate. And another thing, let me ask you this, right? The goal is to be self-insured. If I can show you how to have $250,000 to $1 million in savings and investments, do you need, and the key word is need, life insurance at that point? No, because you're self-insured. So we got to stop saying, I'm going to pay into life insurance for my whole life. Nobody can access that until you die. You need money to live off of, right?
Right.
So what I do is I show people how to have life insurance during their childbearing years, while we set them up with investment, interest-bearing accounts, so that this way, when they get to a certain age, they have enough money accumulated that they're self-insured and they don't even need the life insurance. Because if you had just on a low 250,000 of liquid assets, right? Something happened to you. Your family could take 15,000 of that 250 and still be pretty good, right?
Right.
So it's helping people to realize you don't need to pay into life insurance for your whole life, but you do need to have some money. So this way, when you retire, you can actually stay retired. Okay, so the three problems that we have in our community: either we have a whole life insurance policy, okay, and you're being ripped off. You have no life insurance, so that means you're a part of the GoFundMe crew, okay? And the last thing is you only have life insurance with your job. The life insurance at your job is not a life insurance policy. You have a certificate, and that life insurance policy is controlled by your job. You have to be an active employee for them to even pay out. So that means if you go on maternity leave, you on disability, you get laid off, you are not an active employee. And then if you leave that job, that life insurance does not come with you. So it's important, even if your job is giving you life insurance, you need to have something outside of work that you own and control.
All right. So how would I be able to identify the right type of policy?
So if you look at your policy and it says anything about cash value, you're not in the right program. If the majority of your life insurance is accidental, you're in the wrong program, because that means that, and that's what happens to a lot of people. I had somebody, they said they had $100,000 worth of coverage. I looked at their policy. They only had $10,000 worth of coverage and 90,000 of it was accidental. that means that that 90,000 was only going to be paid out if they died in an accident. So what about other causes of death? Right. So again, people are tripped up and they'll say, well, I have $100,000 worth of insurance. No, you don't, because 90,000 of it is accidental. So again, if you have a cash value life insurance policy, if you look at your policy, if you have that, okay, if it says most of it is accidental, if you have an index universal life policy, and again, it's too detailed to go into, but a lot of older people and a lot of younger people are being targeted for index universal life. And again, this is setting you up for financial disaster, okay? And even a whole life policy. I know this is what grandma and auntie told you that you need to have, but I promise you is not. You should not have any type of life insurance product where they're selling you on life insurance and investments are together. Okay, and a lot of times people are selling people this stuff because they don't have the proper licenses to set them up with real investments.
All right. So if I said, look, you know what, I don't have no insurance, and we're sitting down and we're talking right now, what would you recommend for me?
So that's a great question. And I love that question because the first thing I always ask people, the person that, okay, and I know you don't have any quote unquote, right? But even if you had something, I say, listen, did the person tell you what you needed or they educated you on what you needed? Because everybody's life insurance needs are different based on how much you contribute to your household. If you're the primary breadwinner and you have a 2-year-old, you need a whole lot more insurance than somebody who's only half the breadwinner and they might have a 15-year-old or 16-year-old in the house. So what I do is I come up with something called a financial game plan for the person where first of all, I'm educating you on the different types of life insurance. That's the first thing I'm doing so that you actually have the knowledge, because again, what's missing in our community, we're sold a lot of stuff, but we're not educated on a lot of stuff. Okay, so I'm sitting down educating you, and then I'm asking you questions specific to your personal financial situation so that I can then tell you how much life insurance you need and also how much you need to start investing so that you can actually be financially independent within a certain time period.
Amazing. And the reason that I say amazing, because everything that you said is how you're teaching people to bridge the gap from lack of knowledge to even now having the knowledge and doing something with the knowledge as well.
Absolutely.
So, you know, when we look at it from that standpoint, we all have a common thing that we all deal with, which is death. Mm-hmm. And how do we go through the processes of properly grieving? Well, how can you properly grieve if you're trying to figure out, as you said earlier, the GoFundMe and trying to get this and how we going to do this? Well, if we have those conversations in advance, right? So we can have forethought and say, we know that this is going to happen. What am I going to do to prepare myself? That way I don't have to be scrambling around and trying to figure out what I'm going to do. And I love how you're saying, you know, a lot of people only have like, it's accidental. Oh, but I have this, because people will say, oh, I got this and I got that. So I like how you're teaching people that aspect and really changing the game with that. But what were you going to say?
I was going to say, and you said something key, you said grieving. People, and again, we have so much trauma in the Black and brown community, but a lot of it can be avoided. Most of us we never really process grief or our trauma because we always just got to go out and make it happen, right? Because when people die and there's no life insurance, you're not going to only grieve in the physical, but you're also going to financially grieve if you don't have enough life insurance, right? Because again, you take a husband and a wife. A husband dies, the wife don't have no life insurance. She can't even grieve his death because she got to return back to work so that she can make the money to pay the bills. So it's like two grieving processes that people don't, again, because we're just thinking about today and we're thinking about, oh, but I want to buy this bag, or I want to go get my hair done with this money, or I want to go do this, and investing into the wrong things, not realizing how sometimes we can be our own worst enemy. So it's like a double grieving process financially when we don't have the proper life insurance. And that's why I tell people, you got $10,000 worth of life insurance. That's just enough to get you on the ground. What happens tomorrow when the bills got to be paid for that you were responsible for?
Correct. So this is a lot deeper than, oh, well, I'm gonna get some insurance. That way my family is cool, because if I don't understand the policy, then I'm gonna get the wrong type of insurance.
Yep.
So now that when I die and they look and they actually get this money, they actually are going to get shortchanged because it wasn't an accidental death.
Right. Yep. Or it was just not enough.
It was just not enough. Okay.
To somebody earlier, we also in our community, when people try to teach us stuff, we gotta be more receptive. You know, everybody's not always out to get you. You know what I'm saying? Everybody's not trying to put a wool over your head, but it's time for us to take the money out the mattress and really put our money in some stuff that's really going to allow us to be about what we talk about and start creating generational wealth.
Understood. So, all right, I have one last question. It's kind of more of a scenario, because we talked about a husband and wife, right? But what about in those situations where you have a child, say you're in your 30s and your parent dies? Well, what do you do? Like, what's the process of my mom or my dad, or whoever died? I know they had insurance, but I don't know, who do I call and what was this? And so what does that kind of look like in that process when somebody actually does die and you're trying to take care of everything that needs to get taken care of?
That's actually a great question. And there is a website out there. And, I can give that to you to kind of put in the episode description, because I can't think of it off the top of my head, but there is a place where you can search life insurance policies to see if somebody did have an active policy, because that's really the number one issue that we see in the community, in this type of field, is that most people don't know that the other person had a life insurance policy, so and that's another thing, even with Thanksgiving coming up, we got to start spending time talking about stuff that really matters. We can kiki and kaka all day about stuff that don't matter, but as soon as people get serious, we don't want to talk about that stuff. So it's important to let people know, listen, I have a life insurance policy. This is who is with. You're the beneficiary. But like I said, there is a tool where you can actually look that up, and I will share that with you so that you can put it on the episode.
All right. Thank you so much. Again, Apris, I just want to say thank you for sharing this information, not only just with my audience and with myself, but also with the community, because you are really changing people's lives by giving them this information, because it's not just about insurance. It's about insurance is finance.
Yep.
And you're bridging the gap between lack of knowledge and understanding what to do with the now knowledge that you will have and that you need to have. So I just want to say thank you again. So where can people find you and get help with you from your financial services or insurance? How can people connect with you?
Absolutely. So like I said, my name is Apris Walker, Apris, last name Walker. So I'm Apris Walker on Facebook, and then you can find me on Instagram at Apris, Apris __. And then you can also reach me by email. My first name, Apris, aprismw@yahoo.com.
Again, thank you so much. I truly appreciate this opportunity of you coming here to talk to us. Remember, my motto is always, greatness is within you. If greatness was circumstantial, then when you were no longer in proper circumstances, you will no longer be great. So remember, greatness is your mindset, and I always want you to go and be great. All right, now it's time for Ask Mr. Mindful Minute. So, Apris, what questions do you have for Mr. Mindful Minute himself?
So the question that I have is, what would you say is the biggest tip for somebody to start their day off on a positive note?
I'm going to automatically go to one of the things that I teach all of my coaching clients, which is say the 777 technique. And the 777 technique is 7 affirmations, say it 7 times a day for the next 7 days. So you're going to come up with 7 affirmations that is going to help you remind yourself of the person that you want to become. Because we go through different things each and every single day. But guess what? You may be a person that is confident in making money. You may be a person that's confident in showing people love, but you may not be a person that's confident in being punctual. Well, you need to have affirmations that is going to help you to remind yourself this is what you want to become, because everything starts in your mind. So if it starts in your mind, everything is created twice. It is created mentally, and then it is a manifestation. But we tend to think that, oh, well, that's only physical things. No, that's also you, your physical being, and also your emotions. So if you said, I want to start my day off like this every single day, you're going to wake up and you're going to say your 7 affirmations because you just talk to yourself a certain way. And then you have to remember, you have to say it in a certain tonality. When you say it in a frequency where it actually gives you goosebumps. So if you ever, you're listening to music and it's like, man, that beat just gave me the chills. Well, what's happening is your body is actually remembering what's going on. So when you say the affirmations in a way that is going to make your body remember it, it is going to now help you to trigger what it is that you want to be and how you want to continue to become.
Awesome. Thank you for that.
Not a problem. Not a problem. So I just want to say thank you again and continue to be great and keep being great.
You're in control of how you feel. You're in control. You are the determining factor of your feelings. No one else can control how you feel. Remember, you're in control how you feel. So control your feelings.